Welcome to Conversations, a weekly audiocast featuring interviews with leading investment strategists and recognized financial professionals. Brought to you by the Market Technicians Association.
This is Conversations, the official MTA podcast series, and today's guest is Julius de Kempenaer. Julius is the creator of Relative Rotation Graphs, which has been available on Bloomberg since January 2011 under the mnemonic RRG. Julius graduated from the Dutch Royal Military Academy in 1986. In 1990, he left the Air Force as a captain and entered the financial industry as a portfolio manager for Equity and Law, now part of AXA Investment Managers. In 1992, Julius moved to Robeco as a buy-side quant technical analyst until 1997 when Rabobank acquired Robeco. He then moved to Rabobank International as head of technical analysis on the trading floor in Utrecht. Until June 2007, he served in a similar role on the trading floor of Kempen & Company in Amsterdam. Since June 2007, Julius is Director of Quantitative Strategy at Taylor Asset Management Limited, where he works on development and maintenance of various asset allocation models that are used in the management of Taylor funds and managed accounts, and also running RRG Limited with Trevor Neal. Welcome to the program, Julius.
Thank you, Lance. By the way, I'm impressed with your pronunciation of the Dutch words, really.
Wow, you stretched me a little bit with the bio, but it's going to be well worth it. Now, we seem to have a lot of pilots and military guys on this program. Tell me how you went from the Air Force to portfolio managers, and how did technicals first show up on your radar?
The short version of that would be that during my study at the academy, I wrote a thesis on how the Dutch Air Force could use options to hedge the currency risk, because we were buying American F-16s at the time, which we had to pay in US dollars, and we were losing a lot of money on the currency trades. So I wrote a piece on how the Dutch Air Force could do that better. At least that was my thought. And that's how I got in touch with options and trading of options. And I got an evening job where I taught retail investors what an option was and how they could trade it. And then the logical next step was, but when do I buy and when do I sell? And the company that I ran the courses for was involved in technical analysis, and that's where I picked it up actually and started teaching myself and reading a lot of books and stuff. And onward, basically that's when technical analysis came into my life, and it basically never left.
Now, relative strength is core to the work that you do. Whose research did you initially read that resonated with you, and what aha moments did you have in your relative strength research?
Well, there's a good story there how it came into my life, and when it actually dawned on me that it had added value. Because when I was working at Robeco as a buy-side analyst and later at Rabo, we had a compensation system where all the analysts were tracked and rated based on their recommendations. And I was doing the technical job with another colleague of mine, and it was in the early 90s, and markets were just going up all the time. So as good and sound technical analysts, we had all the individual equities that we were covering on a buy recommendation, because they were all going up. All the trends were up, they were breaking to new highs. So we said, this is buy, you got to buy it. And then at the end of the year, the whole system was based upon outperforming your benchmark. Well, we were young guys, little did we know. We thought we were doing really, really great because we had all these trends riding and we were making massive profits on all these individual positions. At the end of the year, it appeared that we didn't really outperform the index because we had the index in our portfolio. We never distinguished that one was better than the other. So that was a wake-up call where we said, well, we've got to do something different. And then we looked in our toolbox as technical analysts, and that's where we found this relative strength. Not to be confused with the RSI, but relative strength as comparing one with another. And then we started developing stuff that used relative strength for our market calls. And from then, it was basically only relative strength that we were doing. And I took that a little further as I went off into the institutional world where relative strength is basically the only tool that they're using, because all these guys on the long only side in the fund management need to outperform some sort of a benchmark, and relative strength and at the same time being 100% invested. So relative strength is basically the only tool that they can practically use out of the technical analysis toolbox. So that's where my interest in relative strength came from. You also asked me which research influenced me, and that was a very intriguing Englishman. His name was Richard Lake. I think he passed away, unfortunately, because he was one hell of an analyst. He was really, really good, and he taught me that relative strength was the only thing that he actually looked at. And he had a publication from a very old UK brokerage company called Dolphin Bruin, where he published relative strength stuff on FTSE stocks on a weekly basis. And that was my biggest motivator to continue my search into relative strength.
Okay. So from your relative strength background, you created a tool called relative rotation graphs. Can you tell me about that?
Yes. Along the way, everything revolved around relative strength. So when I then moved from the buy side to the sell side, I got, on a trading floor as a sell side analyst, which is not really a salesman, but in today's world, all the analysts have to sell their own recommendations, and you got to talk to clients, and you got to call all these portfolio managers and try to make your point in the presentations, and that's a really tough job. And I've described it a few times. It's very hard to get a hold of the modern portfolio manager. You talk to voicemails a lot, and if you get them on the line, they're always busy. And it was difficult to come across with the message that you wanted to give these guys. And in my presentations I use the example of when you talk to a portfolio manager and he says no. I say, listen, I have a couple of nice ideas here in the chemical sector. And then this guy says, no, this week is technology week. I'm only looking at technology stocks. So if you could give me your best 5 picks in technology or some good ideas, that would be great. And then, you had this call prepared with some very nice names in chemicals. And then all of a sudden, this guy, wants to know about technical stocks. So I needed to find a way where I could wrap my message basically in one picture. I wanted to put it right into their face, so there's no way they could negate it or evade it. And that's how RRG came to life. I was always, you had to flip through a lot of charts, and I wanted to put that message into one picture. And that's basically, the very short version of how RRGs came to life after a lot of playing around on Excel and copy pasting and trying this, trying that, etc., etc. But that's how it basically, that's the most important rationale, trying to give them the big picture in one picture instead of having to flip through a lot of individual charts.
Well, unfortunately, this is an audio show. Can you tell me what the picture looks like?
Yeah.
What is the?
It's going to be a challenge, but yes, I can. It's not your normal price time-based chart as we all know it from our technical analysis programs. You got to compare it with a traditional scatter plot where there is no time axis, but there are 2 axes with inputs. Basically two figures, the x and the y axis. So there's no time on that scale. Now on the horizontal axis, the x-axis, we have what I call the RS ratio, relative strength ratio. And that is a normalized version of relative strength, because when you're analyzing a universe, all your measures, all your gauges need to be on the same level. You need to compare apples and apples and oranges and oranges. So that's on the x-axis. Then on the vertical axis, on the y-axis, we've got what I call relative strength momentum. And that is also a normalized version of momentum. It's not price momentum, it's momentum of this relative strength ratio line. So it measures the speed and the slope up and down of that relative strength ratio line. And when you put put the observations in the plot, you will, let's stick with, for example, the GICS level 1 sectors in the US. That's 10 sector indices. If you put these observations on such a plot, you will get 10 dots, which each depicts the position of that sector based on the relative strength ratio level and the relative strength momentum level. So you got 10 little dots. That's a the last observation. It's a snapshot of now. Now, obviously, to make it more lively and more dynamic, you want to add some history, because we want to see in what direction those little dots are moving. So initially what I did, I plotted the previous observation. So I had for every index I had 2 dots. And then you saw, you already got a little bit of a gauge where it's going. And then I started connecting those 2 dots together. So you got a little line with a little arrow on it. And then I thought, well, we can make that a little longer. And then it evolved, and now in an RRG plot you can actually set the length of the trail, which will show you the history of that sector, the position of that sector in that universe versus all the others. And if you make the trail long enough, or if you have it dynamically, as we have it on the website and you can see it, you will actually see that they are all rotating around the benchmark, which in this case is the S&P 500, which is in the middle. And it will actually visualize sector rotation, because when I had it for the first time on my little Excel sheet with a lot of VBA code spaghetti together, I started seeing the rotation. I had a real aha erlebnis. It's like, wow, it is really rotating, but because everybody was always talking about sector rotation, but nobody was ever able to show me that they were actually rotating. And this thing actually shows you that these sectors, but everything you throw at it, asset classes, individual equities, forex, it all rotates around the benchmark based on relative strength and the momentum of that relative strength line.
So what makes RRG different is you're looking for not only relative strength, but you're looking for momentum strengthening of the relative strength. Is that correct?
Yes. Yeah, that's right. Yeah, because we all know that relative strength is actually a very strong tool in itself, and the good thing is that once you have a relative strength line, you can throw any technical analysis technique to it. You can draw an RSI or a MACD or a moving average or whatever on that RS line. You can actually look for support resistance. You can look for breakouts, etc., etc. But you will run into the same problems as you will have with other trend following techniques. It can stretch very, very long, and then it takes a while before it goes down. And we all know that momentum, or rate of change might be a better name for it, is a leading indicator. Before a line forms a peak or a trough, the first thing that will happen is that your momentum will start to level off and start moving in the other direction. And that's why I threw in momentum, because when I was working with these relative strength lines, and the RS ratio was the first algorithm that I came up with to be able to rank a universe based on relative strength, to be able to make a decent ranking, say this is the best and this is the worst. But then you wanted to know what the slope and the direction of that line was, and that's how I came to use rate of change of that relative strength line to actually measure that rate of change. And that then obviously I run into a lot of problems, because you need to also normalize it against all the other elements in the universe. That's where the challenge is. And that became the relative strength momentum line. And now, because these two measures are both normalized for the whole universe, you can actually plot them all together in one plot, and they are actually comparable, which is absolutely not the case with a raw relative strength line.
Where have you seen RRG to be most effective? Is it more effective in some universes than others, or have you seen it to be equal effective?
Yeah, well, the thing would be define effective, because RRG is a visualization system, so it's very difficult to actually measure performance based off RRGs. Because the way I'd like to pitch it is that RRG should be basically your starting point for your analysis, and it should guide you towards the elements of the market that actually need attention and are worthwhile looking at, and then you can, throw in your own workflow and be comfortable in your own set of techniques, because we all have different sets of techniques that we use and we like to use. So RRG is not telling you that everything you've been doing is wrong and you should only use RRGs. No, RRG is saying, let me be your first point of observation. I will give you in one shot your whole universe, and you will be able to immediately pick the elements that are worthwhile looking at it, channeling that piece that we're all short of, which is time, towards the stuff that really needs attention, instead of having to go through lots and lots of charts and things that have no meaning at the moment. Mm-hmm. That's the use of RRG, and then I think it's equally effective for equities, asset allocation, forex. I've seen people using it on commodities, country indices. You can throw anything at it as long as you make sure that you got apples and apples and oranges and oranges. That's probably the most important message. I'll give you a quick example. If you put an equity index and a bond yield into an RRG, that's a very dangerous picture, because that will not give you a good clue. Because bonds, bond yields and equities are the reverse. So if you want to compare bonds and equities, you need a total return bond index and a total return equity index. And these two you can safely throw at an RRG and make up your mind and see what's happening.
Sure. So RRG, you can go into Bloomberg and type RRG Go.
Yes.
To access the tool. But yes. If someone does not have access to Bloomberg, what options would they have?
Basically, the only option right now is go to the website, which is www.relativerotationgraphs.com, where we maintain a number of RRGs on fixed universes, like the GICS Level 1 and GICS Level 2 in the US, European sectors, asset allocation, forex, and there you can see, and we maintain that on a weekly basis. I realize that is not ideal for people who have shorter term horizons, but it will give you an idea of what's going on, and you can use it to your avail. And hopefully we will see RRG coming available on non-Bloomberg systems sometime in 2013, hopefully in the first half year, but I can't really commit to that. But there are people who are actually working to code RRGs into their systems, and they should be ready sometime this year, hopefully sooner than later.
Can you share with us your views on the market?
The next question is which market? But as we're talking for US.
Yes, I guess I was coming in from U.S. market. But if you want to do European market, everything's related nowadays.
Yes, well, throw it at an RRG and you will see it's not. You will actually get really nice pictures if you compare, for example, U.S. markets with European markets. That's very tradable. You can actually trade the differences. But if we stick to the U.S. markets, and then where the base of RRG is in sector analysis, I see a pretty defined picture at the moment, I would say, where financials is still the strongest sector if you measure it in terms of relative strength. It's lost some of its momentum, but it's still moving higher on the relative strength ratio scale, which means that the RS line is moving higher, albeit at a lower pace. So that's still a very mature uptrend, and it looks to be improving again after a little stall. So that is for now still a good one. Materials to me looks really, really nice. That has entered the leading quadrant, which is the top right quadrant of the RRG plot, and is moving higher at a very nice 45-degree angle. So I expect a good performance there. And then the other ones there are industrials and consumer discretionary. Now, where you should be careful, or where I am a bit more cautious, is in energy, in telecom services, and in utilities, and consumer staples. Consumer staples is interesting. If you look at an RRG of this GICS Level 1 and then find the consumer staples sector, it's available on the website, this one actually, you will see that consumer staples moved from lagging, which is the lower left quadrant on the plot, to improving, which is the top left, which means that relative strength is still weak, but momentum is picking up, and it was moving towards the leading quadrant, but it turned around and now is heading really rapidly to the lagging quadrant again. So it basically rotated completely on the left side of the plot, and that usually is not a very good sign. That usually suggests more underperformance ahead, and what you should actually what you actually would see on a normal relative strength chart is a relative strength line that is trending down, forming lower highs and lower lows, and this consumer staples one has just formed a lower high in the relative strength line. So it is already trending down. It recovered a little bit, made a lower high, and now started to move down from that high again. So it's confirming the downtrend and speeding up. So I'd be very careful there.
Okay. Is there anything you'd like to add before we go?
Well, in my presentations that I do for Bloomberg and on the MTA, I always use that RRG is not relative rotation graphs, but it's really rocking graphs. Joke, but I can't. So, everybody who's interested, please visit the website. It's still the old one. I'm actually working on a brand new website, so stay tuned. It will be up within the next few weeks. It'll have a lot more information, probably more RRGs as well. And if you're interested in getting RRGs on your own system, stay tuned, because we will announce the vendors who will actually put RRGs on their system through the website and through our mailing list. So if you want to keep informed, register yourself. We won't stalk you. Actually, I think we send way too few emails, but that's me personally. I don't like to be stalked, and we'll be happy to keep you informed on what we're doing.
Okay. Thank you very much. Today's guest has been Julius de Kempenaer, and that concludes today's MTA podcast. From LexingtonCapitalLLC.com, I'm Lance McDonald, together with recording engineer Shane Skwarek at the MTA, reminding you that price is always right.